name is Ron Schranz. I'm managing partner at Burt Company CPAs, and I'd like to talk to you today about exit planning. Step 2 is, what are the finances? And the first consideration is, what is the business going to be valued at? How valuable is the business? And this is key, especially if you go back to the earlier point I mentioned, where many business owners are looking at their business as their primary funds for retirement or the next stage in their life. Now, there's one thing to think about when we talk about what is the business worth, and it's the idea of knowing what it's worth versus estimating or thinking. And many business owners think they know what it's worth, but when a person that's trained in business valuations actually calculates and crunches the numbers, we find out that oftentimes the business owner's estimate was incorrect. And this can have a major effect on what happens then for a successful retirement or exit after the plan. So very, very important. Let's get that business value right. So let's use a trained individual to calculate what that business is worth. Secondly, what are the business owner's other assets, resources, obligations, and liabilities? Here we're trying to think about what the business owner is going to be able to add to the value of their business to be able to support them after they exit. Oftentimes this looks like assets like brokerage accounts, savings accounts, could be real estate, and of course we also have to factor in any liabilities related to real estate and other commercial interests that we may have. Then the third thing related to finances is, how much money or cash flow is the owner going to need once they leave the business? And again, oftentimes this is related to retirement. So we have to think about the total accumulation of resources that the owner is going to need if they're no longer working, and having that steady income as they did when they were running their business. There's a big difference between knowing and thinking. And here again, we recommend using a professional such as a financial planner or somebody that's well versed in looking at funds, resources, and obligations to help a business owner really calculate what their cash flow needs are going to be and what that time period is going to be. Again, it's very easy there to underestimate what an owner's cost of living is that they've gotten used to, and our experience is that oftentimes owners think that their living standard will decrease substantially upon exit of their business, and that's not what we see. At least for the first number of years right after the exit, owners tend to be at the same level or a slightly higher standard of living level when they do things like travel and maybe enjoy some free time that they didn't have before.